It's that time, guys. We are live. We are live here, YouTube. Love it, man. This is a great time of year. It's a great time of the week because Monday at 12:30 local, and that it means that we are doing our YouTube live session. We're bringing you data that you're not going to find anywhere else. Local data on the housing market, so you are fully informed as to what in the world is going on. And guys, what in the world is going on? That's a good question you should be asking, so that you are fully prepared. Now, this is a show about housing and everything about housing. Now, housing is affected by all local economics and broader economics as well. So we're going to touch base on that here a little bit. How do you prepare for the second half of 2024? How do you prepare to ensure that you have a good idea of what's going on so you make the most informed decisions as to what you may want to do? The show is all about education and hopefully some entertainment along the way, right? But we're going to dive right in and talk about what some of the overall market conditions are that are happening right now. So, guys, I like YouTube. Excuse me, I like Yahoo Finance, not YouTube, and I don't think YouTube has a finance section. But, anyways, and this guy right here is talking about markets are in reflection or inflation mode, not inflation, not deflation, reflation mode. And so what is he referring to? Well, it's interesting because it says investors are eagerly awaiting Wednesday's personal consumption expenditures report. The PCE, guys, don't fall asleep. Don't fall asleep on me. All right. There's the CPI, there's the PCE. Now, supposedly the Fed likes the PCE better in terms of making decisions based upon that. But it will provide insights into how the Federal Reserve is managing inflation. That report's coming out this week, okay? So this is very important to pay attention to, all right? While acknowledging the pro-growth nature of Trump's economic strategy, it's also the backdrop that we're kind of concerned about. He warns the robust economy combined with continued monetary stimulus could potentially lead to what he describes as a bit of an error in policy, creating additional inflationary pressures. This is what this guy is talking about, okay? Despite these reservations, he remains optimistic about the current market environment, characterizing it as a reflationary period. He recommends investors position themselves in risk assets, specifically highlighting small cap stocks, financial sector investments, and value-oriented equities. Now, he didn't mention real estate. And maybe he's not supposed to because he's on a CNBC show of some sort, right? Some financial show, and they don't really talk about investing or holding real estate a lot in that. I'm a big fan of that, guys. I think it's a huge win, and I think this could be very, very good for you too. Now, the problem, guys, with investing in real estate is the interest rates, right? And the interest rates are not coming down. Matter of fact, they are continuing to spike up. And a lot of it is because of inflation and the PCE and the CPI not showing that inflation is under control. And if you go, again, I always say all the time, you go to the store and buy your bread and buy your eggs, you probably feel that as well. Buy your auto insurance, your home insurance, it's all going up. And so this is an interesting time, but I do believe that although he remains optimistic, I am too. I think the rest of the year, prepare to have it be a little bit like it currently is. Now, that doesn't mean you just stay stagnant. I'm not going to stay stagnant. I'm going to go out and I'm going to actually look at buying a piece or two of real estate potentially. Now, if you can afford that and that's what you like to do, maybe you should look at doing that too. Maybe you want to invest in other things. I don't know, but I don't think it's a time to sit back and do nothing. I'm a big fan of jumping in and playing the long-term game. Now, obviously, if that's not your strategy, whether it be stocks or real estate, whatever, then that's cool. That's totally cool. And so if that's the case, you have to pay a little more attention to the swings of the market. But for a long-term investor like myself, just being the tortoise, not the hare in the race, I'm always looking to make moves and continuing to put investment money to work. That's what this is talking about, okay? But let's go back and let's dive a little more into this, okay? All right. A couple more articles in here that I thought were great. Fed's top expert on productivity sees case for optimism. So now it's not all negative here, guys. We have some optimistic news here, right? This is interesting. I think people need to hear this because you may not hear about this on your nightly, news that goes across America or even the local news, right? But this is interesting what he says. The economic advisor at the Federal Reserve Bank of San Francisco, known for his research and productivity, blah, 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 blah. Okay. He is basically saying the recent surge in productivity may not necessarily fade as it so often has in the past. Okay. Now, stay with me on this. This is interesting. He's been saying that typically, and I'll just kind of paraphrase, typically that when you have good productivity, then the market overall goes up like it has for the past, 20 through 22, it definitely did. And then even the stock market has continued to be somewhat resilient here over the last couple of years with high inflation and so on and so forth. But what he's going on to say is that he's optimistic because he believes that the period of time that we're entering into now is actually going to be a period of time in which we continue to have productivity growth. It flatlined a little bit and it's going to go back up. A lot of times people think it's only going to be cyclical in nature when you have productivity gains and then you lose that productivity and then you have to, therefore everything goes down and then you have to come back up eventually in the future. But he's saying in this cycle, he believes, given he mentions artificial intelligence and some other things that are coming out here in the marketplace, that the productivity that we gained over the past several years, although it's leveled off here recently, it will continue to go back up without taking a dip first in this particular cycle. Interesting. Could be wrong. He could be wrong. No one's obviously knows for sure when predicting the future as a crystal ball, but it's at least a good story because it's not all pessimistic, right? But you guys know it's always potentially could go up and down, right? You just don't know. It's just someone's opinion, and I think I wanted to share it with you guys. Now, this is interesting too. Speaking of investing, rental home investors poised to benefit as mortgage rates, high home prices sideline buyers in 2025. So now what this article is talking about is that rental homes could be an attractive asset class to own. So even though the gentleman in the previous article didn't mention it, they're mentioning it here. This is an article by the Associated Press. And it's saying the reason why is because they don't believe rates are going to be coming down that much anytime soon in 2025. That you're probably going to have more of the same. Okay. And say their outlook boils down to this simple thesis. Many Americans will continue to have a difficult time finding a single family home that they can afford to buy, which will make it renting a house an attractive alternative. If rental rates stay the same or go down, they continue to climb as well, that could be a problem, okay? But it starts with mortgage rates. I mean, duh, right? I mean, we all know this. And the 30-year fix did fall down to 6.08% in September before it just went right back up, okay? And what they're saying is that they would love to see the rates come down in the fives, the low fives especially, to really get the housing market moving, but that's probably not going to happen in 2025. That's their opinion. So therefore, if you have the ability to buy a rental home, duplex, whatever it may be that people can live in, right? Then you should have a good asset class, a good return on your investment potentially in 2025 because the rental market will remain strong. That's the whole thesis here in their deal. So here's an interesting stat. In the third quarter, builders broke ground on about 24,000 single-family homes slated to become rentals, homes to be rentals, new construction to be rentals. That's up from about 17,000 a year earlier. In the second quarter, single-family rental starts climbed to 25,000, the highest quarterly total going back to at least 1990, guys. That is crazy. So obviously a lot of smart money, a lot of big money, they're taking the bet as well that because rates will stay high, they're going to continue to build, I guess, affordable housing to an extent, right? Single family house, it has a yard and people want that when they rent. And if they can build it at scale, even though the price will go up, the portfolio will go up, they can probably maintain the price of the rents to be a certain number because they know that going in ahead of time based upon their cost to build. It's interesting, right? So, and because we do have a housing supply shortage, even though you wouldn't see it right now necessarily in Phoenix, we do have a housing supply shortage nationally and in Phoenix. Just right now, supply is going up, and that's causing prices to stay about where they are, if not go down a smidge, and days on market to increase, okay, for the most part. So that was interesting. All right, now let's go over to Cromford Report. We haven't touched on that for a while, so let's dive into that because it's important to always see where we're at when it comes to supply and demand. And guys, check it out. It's going down again. Last week, we're at 87 and some change. We're now at 86. So our CMI is continuing to decline. And the reason why is because our supply, which typically curtails this time of year, hasn't done so. So if you look at this graph right here, okay, you can see this is the most updated look. It's increasing up to 22,086 last week. And then it actually went down just a little bit to 21,994. That is a good sign. That trend should hopefully continue as we head to the end of the year. So preparing for 2024, you should expect supply to finally curtail like it did this year, and pretty much every single year in the Phoenix marketplace. So hopefully this comes down like this, somewhere around that green mark where it was in 2022. That'd be great, because demand will eventually increase after the holidays. Demand does not increase at the end of the year. But hold on, demand is usually pretty good at the end of the year because people are looking, they're preparing for their move in 2025, if not 2024. We just had a house that we sold yesterday. People are buying houses now, guys. They really are. They're buying now because their situation dictates it, right? So they just jump in and buy it. So if that's one of you, let us know. Give us a call. We'd love to help you out, talk you through this whole thing, what the best timing might be for your situation. 480-660-5974. Okay. Now, going back to the Cromford report, you can see the different areas of the valley right now are doing what they are doing here. Look at with Fountain Hills as the number one city with the largest decrease in the Cromford market index week over week, minus 28%. That's huge. Now, PV has been getting crushed because of the seasonal market, right? And I think the election, a lot of people with a lot of money looking to spend $5 million, $10 million, $15 million on a home, typically own businesses, typically have equity in the marketplace, and they don't like uncertainty. And so I think you saw that playing out in PV because, PV, you can't even get into PV unless you're, 3 million plus, and the 3 million would be not a super nice house. So interesting, right? Yeah, I know. It's the highest real estate in the valley. Okay. Now you have PV actually increasing. That's a good sign, guys, because if they're increasing, that means the money, quote unquote, the money is starting to come back into Phoenix, and hopefully the big money comes first. Hopefully the rest of the consumer confidence in the rest of the consumers follow, right? So there you have it. And then you have Fountain Hills minus 28, Scottsdale at minus 7. So you still see some of the higher end struggling, right? But guys, look, all of these homes, these top 7 are in a seller's market still these top 7. Now, 8 through 12 in Peoria are in a balanced market. And then you have Surprise, Goodyear, Queen Creek, Maricopa, and Buckeye coming in well below a balanced market. Guys, if you are watching somewhere across America and you want to put your information in, we'd love to know where you're watching from. It helps curate the content better because the algorithm will know where you're watching from. And thank you, by the way, for watching. We appreciate it. I know it's a holiday week. Some people are already checking out. Hopefully you're not. This is a Thanksgiving edition of our live channel, and we show it for you guys so that you don't miss a beat. But we'll talk about Thanksgiving here in just a second. Let's go back to the data because there is some good stuff here to cover. Okay. So those are the suburbs. Then you have the general market snapshot, guys. All I'm doing here is showing you that when it comes to active listings, you can see days on market continuing to increase. Last month at 81, up to 84 today. Now, it hasn't drastically increased. If you go back to even last year, it was at 83 days on market, the average home to sell last year. Okay. So there's no panic alarm. There's no big panic button to hit. Everything is going just fine. Honestly, the market is just super balanced, and it's a little up, a little down, depending on what neighborhood or city you're living in. And that's just what it is. So typically that's a great time to make a move in real estate. Now, obviously rates will play a role in that, but it's typically a great time when it's a balanced market for both sides of the coin. You can see right here, here's our 608 way back in September, and now we are at 6.93% on the 30-year fixed as of today. Okay. Hopefully that comes down, like we talked about, into the low 5s at some point next year in 2025, but I don't see that happening in 2024. Now, because of inflation, I don't think there will be any other price drops. And I think there are many economists out there right now telling the Fed to be careful, because inflation's truly not at that target point and it's not coming down consistently. It's not under control. Although core inflation may be okay in terms of like 2.8% or so, there's still a lot of things that are not okay, that are still wildly more expensive than they were just 2 to 3 years ago. So hopefully we can fix that issue in our national economy. But if I share my screen and go back here, I want to talk about a few more things here. Here's our active listing count we talked about. Hopefully that will continue to curtail with that trend. Oops. And then we have this one right here, which is our rental. Now, we just talked about the rentals being a good asset class to potentially invest in 2025 or even the rest of this year, especially if you need to buy something for tax purposes. Give us a call. I'm looking to do the same thing, guys. 480-660-5974. And we can try to find something that works for your situation for that. But if you look at the rental rate, guys, it stayed pretty steady. Look at that red line. I mean, right now it's $1.36 a square foot across the board for the entire greater Phoenix metro area. $1.36 a square foot. And it's kind of stayed right on that red line all the way through. Okay. So you can see with the years, it really increased all the way up till about 2022 August, which coincides perfectly with the housing market for the most part. When the housing market started to go down, rental rates did not, but they maintained. So as an investor, that's great. Your equity, maybe it went down a little bit because you bought, whatever, and the prices went down a little bit in the house that you purchased. But if your rental rates don't, you just hold on. You wait to sell when the market's better. And this is what this is providing to you, this stability in the Phoenix housing market if you're looking to rent. And guys, hopefully you've seen a couple of my videos about the taxes in the Phoenix area. Guys, property taxes are awesome because they're so low in Phoenix. Now, we are ranked 13th in the country, with one being the best, for the lowest property taxes. So there are states that do have lower property taxes than Arizona, but being 13 is still really good. Okay, so a good place to invest, because if you're investing in that, you don't have to worry about so much money going out to the government. You have more money coming in your pocket for cash flow. Now, going back to the screen here, you can see number of price changes per week. Okay, look at these. You can go all the way back to 23, 24, 22, 23, 24, and then you have where we're at today, which is the highest it's been outside of last week since the end of 2022. 2,605 price cuts for people who have properties on the market. Okay, that's a lot. I mean, you're talking 2,600 out of about 22,000 homes on the market or so. So that's a solid little over 10%, right? A little over 10% of all properties are having price reductions or cuts because it's just slower out there than it has been in a while. Okay, everyone got kind of used to hey, I'm gonna put my house on the market and sell it in 3 to 4 weeks. And if it sits longer than 1 month, what is happening? That's not how a balanced market typically works. Okay. So the right expectation matters. Now let's jump over to development. Okay. Because I think development matters to know what's going on across the Phoenix area. But before we do that, just a quick article here on the construction outlook for 2025. Why? Because we have a undersupply of new construction, new homes. And so to be able to build those is very important. And what this article is talking about is they're concerned about the tariffs that the Trump administration said they're going to put on the economy. But I think, there's a lot of things that will happen. And I think that the White House will listen to the boots on the ground, so to speak, right? Well, we hope so, right? And that they balance that to where it needs to be so that construction can continue to still move forward at a reasonable price, so that the affordability of the houses remain at least where they're at and hopefully not more. Okay. So that's what this article is about. And they're preparing for changes because of rates where there are, and hopefully labor continuing to be where it needs to be. And they don't have a shortage of that. So that's what everyone's hoping to do. And I think at the end of the day, it's going to all work itself out. But the problem is it won't do it super quick, right? No matter what. Anything good to happen takes a while to happen, right? So let's move on. Amazon building sale leads horde of recent Valley industrial deals. Guys, this is just a quick article to show you that there's an industrial building that's selling for, we're talking hundreds of millions of dollars, guys, across the Phoenix area. There's another couple right here that just sold. There's another one that just sold. There's another one that just sold, guys, and the list goes on and on and on. And this is good because it's showing that a lot of money is investing in the Phoenix area, the Phoenix economy for the future. You're not going to spend $100 million plus on a building if you believe that job growth will not happen in Phoenix, that population growth will not happen in Phoenix. So this is a good sign that if you don't believe the prognosticators or the gurus out there, like, yours truly, hopefully, then go off the data. And this is just one more data point for your tool belt. Okay. Now look at this one over here. Another article about commercial real estate investing stabilizing, but it's a slow, long grind remains. Okay. This article is talking about just that. Commercial is not selling at the clip it used to. In fact, it was down 43 billion in terms of transactions amount in the third quarter than where it was last year. So, it's just saying that there's a lot of commercial activity across America, but some places have it better than others. And guys, this article I just told you right here proves just that. Okay. Because Phoenix is the number 1 or 2 city in the nation behind Dallas or right in front of Dallas for industrial building square footage growth. Okay. Mayo Clinic unveils fresh details about Discovery Oasis Biotech campus. Guys, if you work in the biotech or medical field, I guess, right, this is something to pay attention to. This is a sliver of land right south of the 101, right next to the Mayo Clinic campus around 64th Street and 56th Street exit off the 101 on the south side in the Scottsdale, Phoenix area. Okay. All right. On the border there, technically Phoenix. And they are doing a huge Discovery Oasis campus for biotech, healthcare, etc. And let me show you another map here, guys. I want to show you this. This is going to be enormous, but these guys are putting this all together, and it's going to be just a magnet for companies all across the world, not just the country. In fact, they're in talks with a lot of companies already about moving their company completely to this Discovery Oasis campus, which is going to be doing research for medical things and all kinds of stuff that's way above my pay grade, right? But you have the Discovery Oasis, this whole area right here. You have the Mayo Clinic Legacy Campus that's already there. Now, not all these buildings are there, but you have the hospital there, which is one of 3 Mayo Clinics in one of 3 cities across America. Phoenix/Scottsdale is one of them. Then you have the future Mayo Clinic generational growth. They're going to be adding more stuff right here, guys, because a lot of this is just open land right now. Open land, okay? And then you have Arizona State and their Health Future Center. Now, this is going to be this Discovery Oasis is going to be a joint venture with Arizona State too, as well. My understanding is, and as well as some other companies, including the Mayo Clinic. So this is going to be a phenomenal, like, healthcare biotech. It's just going to be awesome to see what goes on there over the next 10 years as they start building this out. So that is a huge development project shaping up right here in Phoenix and Scottsdale. Semiconductor Supplier opens manufacturing facility in Mesa. So another supplier to all the semiconductors that are going on and all activity with TSMC and Intel is now opening up another manufacturing plant to supply them what they need. And this is going to continue to happen, guys. I'm telling you, this is a Tokyo-based semiconductor supplier. And it's going to continue to happen with more and more companies coming here to supply with close proximity to the largest semiconductor or chip manufacturing plants in the entire world, not America, world. So this is pretty cool for the local economy. And then this is a little fun here, guys, before we get to the very end. We're almost going to wrap this up. But the Suns trio accounts for 34% of Valley's 25 highest paid athletes 2024 salary total. So if you like sports, okay, who are the highest paid athletes? It's kind of crazy when you think about some of these money some of these people make. But the top 3 are Phoenix Suns players: Bradley Beal, Kevin Durant, and Devin Booker, right? And those 3 alone total 34% of the total top 25, which is pretty wild. Then you have some, of course, Diamondbacks players. You have some Arizona Cardinals, right? The highest ranking non-Sun on the list is quarterback Kyler Murray at $38.85 million a year. Okay. So there's top 25. If you want that list, go ahead and DM me. I'll get it over to you. But there are some crazy numbers on there. Now, last but not least, this is Thanksgiving week, guys. So I'm going to challenge you to consider what you're grateful for. I'm going to challenge you to consider what you're thankful for. I am thankful for a lot of things in my life. Family, the easy ones are the general ones: family, faith, friends, and finances, and the list goes on and on. But what are you grateful for? Really take some time this week to think about that. Okay. And one thing that I'm grateful for as well when it comes to work, right? And helping people buy and sell real estate here in the Phoenix area is Thanksgiving weekend. That's right. Not necessarily Thanksgiving Day because we're going to celebrate that with family and friends, but the weekend after is one of our busiest holiday weekends of the entire year, guys. People come down here for the amazing weather to have Thanksgiving dinner outside on their back patio or at a restaurant. It is phenomenal. The weather is usually perfect that time of year, and it's been perfect today. And so in doing so, they are always considering maybe doing some real estate. And so we have the ability to really help our clients out in a market that's like we just talked about is pretty balanced and not doing super great. Homes aren't just flying off the shelves right now. We do a huge promotion, a Black Friday promotion. So I'm going to give you just a quick look at what one of our coupons look like for one of our houses that we'll be selling in our Black Friday promotion. So go over here. Let's pull up this visual right here. And you can see with this particular house, now we have about 27 of these houses that will be in this Black Friday promotion or so. But with this house, this one, there's a $15,000 off coupon on this property if somebody wants to buy this house by writing an offer before 11:59 p.m. on Sunday night of Thanksgiving weekend. And it's awesome because it just helps people understand that, wow, I can literally redeem this coupon for $15,000 off the price of this home, and it's mine. And so I just want to leave this up here to show you guys some of the things that we do on a marketing basis. And this weekend is going to be a fun weekend. So if you are in town, if you have any questions about real estate at all and you're not in town, either way, I'd love to chat with you and see how we can help. 480-660-5974. Guys, thank you so much for watching today. And enjoy your wonderful Thanksgiving. Give thanks and just really concentrate on what you're grateful for this weekend alone. Okay. All right, guys. We'll see you next Monday at the same time, 12:30 local. And until then, keep it classy, Phoenix.